Good morning, everybody. Hey, welcome to Thursday. Welcome to January 7th. We're almost finished with the first full week of January 2021. Yesterday, surprisingly, we actually ended up on an up note, which was really surprising to me, given all that we saw yesterday in Washington, D.C. And I'm sure that that will be some of our topic today as we talk with Dave. But let me just remind you of this. The one thing that you can control is risk in your current portfolio. And if you don't know how much risk you currently have, that can be a problem. That's why I developed the financial x-ray. Give us a call. Let's look at a second opinion on your current portfolio. All you have to do is call us at 863-382-0037, or you can go to my website, statlerfinancial.com, and there's a link there to my calendar. I look forward to discussing those type of things with you going forward as I help coach you into and through retirement. So, hey, Dave's coming up next. We're excited about some of the stuff we'll have to talk about today.
7 Highland 40, 20 before 9 here. We're on the phone before we went on the air with Phillip Statler trying to figure out why everybody's so optimistic on Wall Street. But believe it or not, they are. Let's check in on your money and see what's going on. From Statler Financial Services, the one and the only Phillip Statler is on the phone. Phillip, good morning. You and I were both just absolutely shell-shocked the way yesterday afternoon's news went. We managed to set a couple of new closing records on the two major indexes, didn't we?
Yeah, we really did, Dave. I mean, I can't say that I was really flabbergasted at what's happening in the markets as we even this morning continue to see some green ink moving up. Now, don't get me wrong. I'm glad that that's the case. And the naysayers out there that saying, hey, if Biden gets elected and we lose the Senate, then we could see a 10 to 15% decline in the markets. And there's not anything to say that that still can't happen, Dave. But at least the initial reaction was not that of, hey, let's get out.
Yeah, and with the unrest at the Capitol, I fully expected to see the market going down by, 1,000 points on the Dow after last night. But as the insurgency, for lack of a better term, hit the Capitol, I was watching the charts, and yeah, everything fell. We lost about 100 or 150 points on the Dow, and then it just kind of frittered around there for a little while until Capitol Police cleared the demonstrators out, and then we just started climbing again to set the table. Yesterday, it was another record on the Dow. It was up 438 points. Standard & Poor's, another record, up 21 and change. And the NASDAQ was off by a bit yesterday, but it looks from early morning indications like it's actually even recovering, which is kind of strange.
Yeah, it really is. You know, there's the only thing that I can really talk about or think that makes some sense to me is that there is now some certainty. There is certainty within what's going to happen in Washington, D.C. And the markets, whether they like it or not, who's there, that certainty is there. And there's no policy changings yet. So now once we start seeing legislation hit and some policy mechanisms hit, we may see some pullback then because those policies may butt heads with Wall Street. But at least for now, there's some certainty. There's not anything drastic going to happen. And that's all subject to change, obviously.
Absolutely. And it's kind of like you and I were saying yesterday morning. Money has no politics. Money simply wants to go where it can find more money and make more. But, there was a shift going on. There were strategy changes made based upon the probable change of the administration, now a certain change in the administration. I guess the biggest surprise I had off of yesterday is nobody has ever accused Wall Street traders of having a level head in a crisis. And the fact that we had, we had a band of kooks, I'm sorry, that's my first reaction, taking over the Capitol, and actually they shot somebody in the Capitol last night. I fully expected the indexes to go haywire on us, and basically everybody on Wall Street sat back in their leather chairs and said, oh, all right, hedge our bets for a few hours, and then they dived right back in. I was really surprised at the calm reaction.
I was too, Dave. I was really, as I was watching futures last night after all this happened, I'm like you. I was just maybe dumbfounded to say that the markets weren't heading south.
Yeah, I'm relieved, happy that they reacted productively and reticently, but it was a bit of a surprise given, but like I said, Wall Street traders are not exactly known for having a reticent outlook when a crisis hits. We start out the morning with the weekly unemployment numbers. I did not get the continuing claims, but the first-time claims were a little bit of a surprise. My analysts were saying they expected 800,000 new unemployment claims last week, and we got 787,000, which is still more than we'd like. But given the ADP numbers that we had yesterday, sounds like it's at the very least a little bit of relief that the bigger numbers are not going to be the shock downward that we had yesterday.
Well, that's true. We came in at 787, which happens to be the same number that we had last week, at least according to what the cheat sheet I'm looking at this morning. And that is, though my folks at MarketWatch thought we should have about 815,000 first-time claims. So, so better than what they expected, and basically in line with what it was the week before. So, and it didn't drop. It didn't rise. Like maybe the ADP kind of indicated it might. So I think that's all some good news heading into 2021.
Absolutely. Given the fact that you and I were both kind of expecting to have some bad news with all the shutdowns in New York and California, they were expecting continuing claims at 5.2 million. I didn't see that come across my ticker yet. Did you see that?
I have not. I keep kind of refreshing the little blurb that gave me the current, but it hasn't updated for the continuing.
You and I are doing the same thing, wondering what's going on because we don't have that number yet. This is one of those good news, bad news things. Normally we'd say, oh my gosh, it's bad news. The trade deficit was up to $68.1 billion. But again, in a time of economic recovery, it's actually an indicator of more consumer activity. So I'm considering that kind of hopeful news too for the moment, and a problem we can deal with later.
Yeah, we hope that that's the case. And let's face it, we know that, jobs hopefully are going to get better as more and more money maybe gets thrown around out of Congress once Biden takes his place as the actual president. But you don't know, right? We don't know. But I suspect that we're going to have a lot more stimulus coming down the pike and a lot more help for businesses to keep people employed. And so that may help that unemployment number.
It could very well. As I said yesterday here, one of the things that probably put the Georgia races in the bag for the Democrats was Joe Biden on Sunday making that campaign rally in Georgia saying, elect these two birds to the Senate. I'll have $2,000 in your pocket by January 21st. That tends toward being a very positive stroke for somebody when that's said on the campaign trail.
Absolutely. Hey, I got continuing claims here for you. So just came across 5,000,007. So less, down by what, 0.15 million from what was that, 150,000 from last week?
About that, and a small beat over what the analysts were expecting on my list.
Yeah, yep. So that was better than expected. So good news there.
Small bits of good news and a little bit news of relief compared to what we had from the private sector and ADP yesterday. Are we starting earnings season for the first quarter? Or are we getting stragglers from last quarter? Because I know you got a couple of reports this morning.
We have, I'm assuming they're for the current quarter, or whatever that quarter is for these guys. We had Bed Bath & Beyond reported, and they were kind of a miss. They only made 8 cents a share. They were expected to make 19 cents a share. So they fell short. They had a drop in store traffic. They had higher freight costs. A lot of that stuff really takes an impact on a retailer like that. So they're battling this morning. They're getting hit pretty daggum hard. I mean, yesterday they were up 6.5%. They're giving all that up some and plus some today. They're down 13.5% this morning.
Okay, I know there's they expanded out on their store closing list that they were planning on doing over the next few months. We're not on it in Sebring, so if you're a Bed Bath & Beyond person, shop the local store, keep them open, right?
That's right. That's right. That's this. Yeah, because online's great, but man, when you need something right now, online doesn't work.
I hear you there. You got one distributor of vice and another that distributes healthy food in the process. What you want to do, Constellation or Conagra?
Let's look at Constellation. They're the liquor producer and distributor. Uh,
How do we
they
do?
uh, they had a good quarter. They came in at 309 compared to what was expected at 239. So a pretty good beat on their end. Um, Top line was above estimates also. And here's the deal. This has got to be helping them some. They authorized a $2 billion share repurchase program. So some good news there for them as we get ready to start this morning. Now they were up 3% yesterday. They're up another 3% this morning.
And I noticed they're not exactly a cheap stock. They're $231.53 on my delayed quote board. That's an awful lot of Jack Daniels.
It is. They've given back a little bit of that now, but still, it would be a new 52-week high.
Cool.
Yeah.
Now
So
on the healthy side of the fence, Conagra sells the healthy stuff. How did they do?
they do. They beat by 8 cents a share. Not quite as good as the liquor company, but still beat. Revenue was basically in line with expectations. They did have organic growth, a little better than expected, which is a good thing for a company like that. They are they're not trading up this morning. They're trading down about 0.25% today.
Everybody just got excited by the booze.
Yeah. We got one more for you that as terms of earnings. We got Walgreens reported. They beat by 19 cents a share, came in at $1.22. Their revenue did better than expected. They're still saying this. They're having some challenges within their environment, but they're up almost 3% this morning before we get going. And then the last one I want to mention, this isn't an earnings, but it is an update. And I think it will maybe give us some indication of how they'll report when they do report. And that's Costco. Costco came out and gave a update on their same store sales. Their December same store sales jumped 12% from December of 2019. So pretty good deal there. And so that was a good news for Costco. They're up, about 0.75% this morning.
And I'll bet you that their expectations get raised by the analyst firms too after that number, don't they?
Probably so.
I'd get on that. Once again, we were an up day on the Dow and the S&P yesterday. It was a banner day for the blue chips. Both of those were record closes. NASDAQ just off by a tinge yesterday. 45 minutes before we're opening this morning, Phillip, what's happening on the market so far?
Dave, I can say right now, the stock markets as a whole pretty much have all green ink. We got the Dow up 0.25%, the S&P 500 up almost 0.5%, and the NASDAQ up 0.75%. And let's add the Russell 2000. It's in there about 0.33% up also. So good news across the board there. And we go to the commodity side. We have silver and gold up, not by a lot, but silver's up 1/10, and gold's up 0.2%. Crude oil's given back some off of yesterday's close, down not quite 0.2%, but still over 50. It's at $50.55 a barrel right now, Dave.
Yeah, it seems to me that's a little higher than it was yesterday morning at this time. We were just over 50 by a tinge yesterday, I think.
Yep. You're absolutely right.
All right. Overseas markets are a mixed bag. Asia's got an interesting mess. Japan is skyrocketing this morning. The other mainline Chinese markets, including Hong Kong, off by just a little bit at their early morning close. German and English markets are going in opposite directions, but not very much either side of the zero line. No great trend over in Europe. Phillip, like you and I were both headbanging ourselves against the wall saying, how on earth can we not react to the news events of the last 24 hours? It just underscores that nobody, not even somebody that knows what they're doing, can predict the market perfectly. That means minimizing risk is about the only thing I can do for my retirement fund. How do I find you to make that happen?
Dave, you're absolutely right. Nobody knows what the market's going to do. All we can do is make sure that the risk allocation is properly done based on your risk number. And that's why we devised the financial x-ray. Give us a call, 382-0037 to schedule your no obligation financial x-ray. You can go to my website, statlerfinancial.com. There's a link to my calendar, and you can catch up on past radio shows there as well. And then join us this weekend for the Statler Financial Radio Show, 6 a.m. and noon on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
And back here on Light FM tomorrow morning to try to explain what's going on up north in Wall Street land. Phillip, thank you so much. We will catch you tomorrow, all right?
All right, man. You have a great day.
Thanks much. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, again, folks, I want to thank you for joining us today. Hey, if you like what we do on Facebook, please share our Facebook page with your friends and family. We'd love to get that number up to 1,000 followers. So with your help, we can do it. Take care. I look forward to speaking to you again tomorrow.